It is Tax Tip Tuesday, and Chris Porter joins us this morning from PorterKinney to talk about charitable donations this week. So first question, how does it work, and what should you be keeping throughout the year for your taxes?
Yeah, those are great questions. So most people understand you could deduct the cash donations you make to a church or a charity.
Okay.
And you should save those receipts, of course, because they could save you money on taxes. But what a lot of people don't understand is you could actually write off your non-cash donations as well.
Okay.
So let's say you take 5 large bags of clothing to Goodwill. You could deduct the value of that clothing on your taxes, which if you sat down and wrote out exactly what you donated and how much it was worth, that would be a substantial amount of money for 5 large bags of clothing.
Okay, so you can do it if you don't have a dollar value on what you're giving. Because like for me, perfect example you used right there, I took 2 bags to Goodwill and I'm like, I don't know what this is. How do we work that? How does that work? Of course you get the receipt, but sometimes we don't always know what to do with it, I guess.
Yeah, save the receipt and just jot down right on the receipt what you donated and the approximate value of those donations.
Okay, and then so talking about year to year, why is it important to do, what's the point of last year compared to the next year?
So that can be important. It's generally a better idea to donate in the year where your income is going to be higher.
Okay.
If you could predict that. So for example, if you're retiring next year and you know your income is going to be higher this year over next year, make your charitable donation this year.
Okay.
That could save you on money. That could save you money on taxes. And another strategy that a lot of taxpayers can use is actually making twice the donation every other year. So instead of donating $5,000 every year, you donate $10,000 every other year.
Okay, so why would you do that?
Just because there's a bar you're trying to clear called the standard deduction.
Okay.
So your donations aren't saving you anything until you clear that bar.
Right.
So sometimes taxpayers are donating money to charity and not saving anything. Whereas if they doubled up every other year, they would start saving money on taxes.
Interesting. Good strategy. Well, thank you, Chris, for coming in this morning. We appreciate it.